whilst on the topic of Asian investment, it'd be remiss of us not to invite Mark Wizel, Director of Retail Investment, to talk about inbound Asian capital flow. Mark, you've really differentiated yourself in the marketplace and have overwhelmingly shown that that capital is there and for the right product. But if we drew a nexus between that money and retail, are we seeing that money finding its way into retail, or is it looking for alternate asset class?
Hi Ari, and good morning everybody. My breakfast was starting to taste a lot better when Nick Axford went up and said the inbound capital from Asia is on the increase and retail has sort of bottomed out. So I was thinking this could be a good year. But I think, unfortunately, as much as we'd like Asian capital chasing standalone type assets in the Victorian retail market, it's not happening yet. We are starting to experience sort of the early makings of investigation from high net worth individuals and also individuals that run public companies from Malaysia, Singapore and mainland China, starting to look at the retail sort of sector. But I think that the office, Melbourne CBRE office, and also the hotel sector, which Scott will touch on, will come before retail in terms of direct Asian investment, unfortunately.
So there's a lot of the money around, but it's not looking for retail. If we focused on your day job then, the retail investment space, what are the trends that you're seeing? Your team's been very active in 2013 already, coming off a stellar year last year. What are the opportunities that are emerging in the retail sector?
Yeah, we think there's some pretty transparent opportunities, and the visibility towards these opportunities we think is improving, and there's definitely a little bit of an appetite for potential risk on specialty tenants and things of that nature coming back in. But we've had 3 or 4 campaigns come to market so far this year. Inquiry's definitely on the improve, which is really fantastic. Inquiry was pretty strong still in 2012, but it was a lot of market sounding, we felt, and the inquiry that's come to market this year has been a lot more genuine. I think that what we're really seeing as an opportunity is just the continued arbitrage, and people on the panel have discussed it, and Stephen McNabb touched on it before, but that arbitrage obviously between initial yields and the actual cost to fund assets, I think is going to be a real catalyst for some increased transaction volumes. And I can rest assure everybody in the audience, if you do have an appetite for retail, I've had a briefing with many bankers who are sitting in the front rows here, and they also have an appetite and be happy to take your calls. So we'll get moving.
Thank you, Mark. Finally, let's move on to Scott Callow, head of our hotels business here in Victoria. Grand Prix time is upon us again, Scott. Some of us think about Grand Prix differently, but I'm sure you're thinking about it in terms of roommates, flows through pubs. But the begging question is, does Melbourne need more hotels? Could we ever have enough pubs? What's actually happening in that sector?
Well, we've got plenty of pubs, Ari, I can assure you. As far as the hotel sector goes, one of the greatest challenges the industry's faced over a number of years has been being able to drive that room rate growth to a point to justify the immense cost of construction. We've seen probably from the Sydney market over recent years that market remained very, very stagnant, and it only has seen some growth in the last sort of 12 to 24 months. As far as Melbourne goes, there'll always be hotels on the agenda, always planned. Obviously, they're a very attractive investment, and Melbourne's a very attractive place to own a hotel. Touching, I suppose, on the construction cost, but also on the style of hotel that we see going forward, we probably believe that we're more likely to see hotels forming part of an overall development, potentially with retail and even more so with residential product. Certainly that mix gives bankers and investors a lot more comfort to have a bit of a blend across the market, so not all the risk is weighted into one place. Again, on the construction front, most developers are looking at ways of securing a high-end or high-profile manager or operator to get the venture off the ground. The interesting thing there is that when we come around to the sale process associated with these assets, the buyers are looking for vacant possession. So on that front, I suppose it's trying to find that balance between launching your product, getting it into the marketplace, but then having the flexibility or a suitable agreement with the manager to be able to provide vacant possession to maximise the price down the track.
So it sounds like that market's starting to get quite sophisticated about what transaction structure needs to look like. Is there transaction activity happening in the pubs and gaming world presently?
Well, we sat back with a great deal of uncertainty over the last couple of years, awaiting the changes that were planned for August last year. They went through reasonably smoothly, and it would be fair to say that most of the gaming operators that we're speaking to on a regular basis are extremely happy with the results. Most would be completing conversations with us by saying, you will let us know when an opportunity comes up. Gaming is a finite resource in this state. We've only got so many machines. We've got a constantly growing market, and in particular, as we see our suburbs grow, particularly to the southeast, the north and the west, some of these master planned communities certainly need hotels to form part of their overall development. And the developers and operators of these hotels will be fairly firm in saying that gaming forms a strong part of the investment strategy.
So if I surmise, Scott, we could anticipate that provided you're in the industrial sector, the pub should be full of sheddies over the coming year.
It sounds that way, yes.
Thank you, Scott, and thank you to all our panellists. Ladies and gentlemen, this brings us to the conclusion of our formal presentations today. I'd like you to join me in thanking our panellists, Nick Axford, Stephen McNabb, and all those folk that put this wonderful event on today. If I could highlight a few key takeaways from today, it's clear that there are signs of some global stability that is pleasing for us all. Importantly, Asia continues to be a leader, and we're very much hitched, and pleasingly so, to that Asian economy. Yes, we're part of an evolving marketplace, and we need to react accordingly, but if nothing else, in 2013 it sounds like that overwhelming weight of capital will keep us active. CBRE is here to help you navigate your prosperous future for 2013. Your continued support of our business is greatly appreciated. We do appreciate you making time to be with us this morning, and we wish you all the best for 2013 and the rest of your day. Thank you very much and good morning.